So I want to speak now about making a deposit, even when you are pensioners and you have a passive income coming in, or maybe pensions that they have get to a tax limit. They don't get the 9C and 9A or 9B. 9A is not really relevant, but 9B, 9C exempt. So if you have a lot of passive income and you're not using special tax limitations, like for rent and stuff like that, where you can't get a deduction and credit points. So if you have a passive income, capital gains, dividends as well, a pension which is taxable pension. Actually, pension is not derived from, it's not called a passive income because it usually derives from work, therefore it's called an active income. But if you have income when you are a pensioner, you can usually make a deposit to what is known not as a pension but a Gemel, okay? And you can make a deposit and get a deduction from your taxes. Now, the thing is that usually that Gemel, that like a saving scheme, is you can, when you are alive, you can only withdraw it as a pension, which doesn't make sense. I mean, you're a pensioner. I mean, you're coming by 67, 68. I mean, you know, and don't come here, and you're putting for a saving, which is a pension. But I want to take you one step forward, which is the next generation and inheritance, where you can get the deduction from tax. It can be around even 35% for some amount of the tax. And afterwards, if you don't withdraw the money, and it's what is known as a Gemel saving, not just a saving account, but a Gemel saving account, your wife or your children can withdraw this money in one lump size, not as a pension, but in one lump size, as a capital sum, without money, without taxes. Now, you got the reduction from taxes, which can be, 35%. And when in your inheritance, that money is going to be tax-free for your beneficiaries. Okay, so it's not a bad idea if people have a high taxes when they come of age, to put aside for that scheme. Is a good idea. I mean, I'm not talking about inheritance tax, because there isn't an inheritance tax. But if you have saving accounts that your children need to withdraw, they won't pay the inheritance tax, but they'll pay the usual tax. So it's not, you don't have a cream on a cream of taxes. You just have as if you're the one that withdrawing. So that's the idea. It's not a bad idea if someone has 400,000 income or above, then it can really make an effect, the savings. So you're welcome to subscribe and press like.